Good afternoon, team. Khan Horn here from the National Australia Bank's Regional Agribusiness Division. Look, it's great to be here launching our 2025 Horizons information. But more importantly, we're here with Bernard Salt, one of Australia's most famous demographers, futuristic speakers, and I'm an avid follower through the Australian every week. And also Sally Old, our new economist, our chief economist for the National Australia Bank. Prior to that was JB Weir. So great. Just a couple of things before we start the Q&A and a discussion is just want to recognise, so our areas around Australia are doing a bit tough. So evidently last week we had the floods up in our regional manager Corey Beaton's area, Kempsey, Taree, Gloucester. We think of you and also appreciate, Michael Wallace, Corey and the team and all their efforts in that community. Likewise, I was down in southern New South Wales, Griffith, the other week, and we actually understand how dry it is and the extended drought through South Australia, Victoria and southern New South Wales. It is a typical year in Australian agriculture, isn't it? Now, before I start, I just want a couple of points with the Horizons report. A few things stood out to me. Our customers are cautiously optimistic. I think they're happy there's been a couple of aspects they're looking at. Regional valuations are up 5.3% versus 2.6% the year before. About 45% of our customers are looking to expand, to grow. About 40% are looking to invest in new technologies. Some of that is technology like AI, hopefully to protect against cybercrime. I'll come to that later. But also we're seeing our food and beverage manufacturers investing about 10%. So there's a lot going on. So cautiously optimistic. But before I go on and read about the report, I was going to ask Sal, again, congratulations. There's been a lot going on, numbers out this morning, but what's the big picture telling you? What are you seeing with the various bits of data for our Australian exporters in regional Australia and also importers?
All right, let's start with what's going on in the world, because there's a lot going on, as you say, and there are some significant changes happening to US trade policy. We're not at the end of that journey yet. Also to US fiscal policy. And so what we're learning and what we're sort of, I think, quite high conviction on is that while we don't know exactly where we'll settle on tariffs, what we do know is that they're going to be higher than they were on the 1st of January. Yep. So that's a change. And we also know that US fiscal policy is going to mean the US is going to run bigger budget deficits over the next decade. So that's not ideal. But I think more broadly, we do have a very strong sense that the world is changing. And so what this means really is that we are moving into a much less globalized world. So trade is going to be harder and more difficult. And governments are going to turn inwards and focus on national security, economic security, and securing supply chains of lots of different things. And so when we think about where Australia sits in all of that, I actually think we have the potential to be relatively well placed. And this is going to be particularly good, I think, for rural and regional Australia, because one of the things that governments worldwide are going to want to secure supply of is commodities, both hard and soft. And you would argue that Australia, if we play our cards right, is uniquely positioned to take advantage of that. So that's a relatively good thing for us, I think, over the next decade. As you said, some big changes also happening in financial markets. And one of the ones that we observe at the moment is that the US dollar is weakening. And so we do have the view at NAB that the US dollar is at the beginning of what's likely to be a multi-year downshift. So we're looking for a weaker dollar over the next 1 to 2 years. And that'll have implications for the Australian dollar. And so at NAB, we're forecasting that to get to 70 cents by the end of the year. And then we think into 2026, it should continue to appreciate against the US dollar. And we see it getting to 75 cents. So basically back to its long run value after quite a long period where it just sort of hung around the bottom of that 60 to 90 cent trading range. So that's the outlook for the currency. And then on interest rates, definitely good news there. As you mentioned in your introduction, we've already had a couple of rate cuts from the central bank here in Australia. They changed their view quite sharply, quite significantly, I think, in May. They had a real rethink and a reset of where policy is going. And 3 things changed for them. And the first one was that they are now much more comfortable, much more confident that inflation here in Australia is sustainably in that 2 to 3% target band. And indeed, we had some data this morning that confirms that story. So that's good. That's point number one. point number two is that the global backdrop has changed quite significantly. And so they are now a little bit more worried about global growth. And they are also of the view that all these ructions and headlines and changes around trade will actually on net be disinflationary for Australia. So what that means is that all those manufactured goods that come out of China, some of them won't be going to the US anymore. They're going to have to find a home somewhere else, and they're possibly coming here. And that should, all else equal, put downward pressure on goods prices. And then the third thing that they noticed, and we've also noticed ourselves at NAB, is that the consumer in aggregate hasn't done as well this year as we might have expected. And so they've had to shave a little bit off their growth forecast for 2025, as we have also done here at the bank. And so those three things basically meant that I think the bank came to the conclusion that they don't need restrictive monetary policy anymore. In fact, they need something that looks a bit more neutral on its overall impact. And we think that's a cash rate in the low threes. And what that tells us is that there's a bit of runway for the bank to cut rates. And so we're forecasting them to go again in July and in August, and a final one in November.
So three by Christmas is the house call.
Three by Christmas is the house call.
Yep. And just shifting gear a little bit, more domestically, any consumer trends you'd like to point out, or is there anything else you're seeing here in regional Australia you'd like to touch upon?
Yeah, I think there's some interesting things going on in rural and regional Australia. Basically, when we do our big survey of the Australian consumer, our big consumer sentiment survey, what we find very clearly in the results is that consumers in regional Australia have very high satisfaction with their life.
Yep.
They're pretty happy, basically.
That's good.
Which is great. And when we ask them, what worries you and what are the things, the issues that, you do feel a bit anxious about, actually not that different from their counterparts in the big cities. So there are three things that tend to be sort of top of the list. One is cost of living. Two is cost of housing and access to housing. And number three is the cost and affordability of healthcare. Yep. And so they're the top three for our customers in regional Australia. What's interesting is when we look at their spending patterns, they're doing what their city counterparts are doing and actually looking for value when they go shopping. So, maybe buying home brand instead of the upmarket brand at the supermarket, those sorts of things. Yeah. But then when we say to them, what are you not sort of shrinking your spending on? Yeah. Like, what are the things that are really important for you to keep spending money on? It's education, so school fees and the like. It's their children in general, so making sure the kids are still doing all the activities and like. And then the final one, which is probably not a surprise, but it's pets. So very happy to keep spending on pets. So absolutely, generally, some differences, happier on the whole, but also facing into similar issues right across the country, city and rural.
Yeah, excellent. Bernard, thanks for coming in this afternoon. Your first novel, A Big Shift, that it had a big following. Terminologies like tree change, sea change, but I think the one in recent years, the avocado crush, was just a cracker. So you're well known to regional Australia, and look, there's a couple of things I'd like to ask. First one, just around any socioeconomic trends around rural Australia that we should be thinking about now, or any mega trends you can see the data's saying this is a no-brainer, or what are you seeing, Bernard?
Well, there's always mega trends in demography. That's, yes. So you start off with the mega trends, and the mega trends that is affecting all Australians, of course, is the ageing. The baby boomers, the oldest baby boomer this year is 79, and I always say that you don't really hit the peak needing of care until maybe early 80s, and I think we're going to cross that line over the next 5 years or so. And that is a specific implication for regional Australia, particularly farming communities, where the property is then passed on to the next generation. This is particularly interesting in the beef cattle farming sector. You can see from the census figures, the 2021 census figures, there's a significant proportion of the beef cattle farming population over the age of 65. In fact, it's one of the oldest occupations, very similar to religious minister. They're all over 65 and beef cattle farmers, in fact. And so one way or another, we're going to see a shift in the farming model, I think, over the next 5 years. Families, of course, wanting dad to retire, move into town perhaps. And I think we're going to see that. It might sell out to the neighbour, or it might be to a corporatising farmer nearby, in fact. And the second major lifestyle shift is the embrace of lifestyle. So we've had sea change, we've had tree change, we've had the whole hipster movement moving back into the city centre. But I think we will see baby boomers and even millennials looking for affordable housing, even just beyond the edge of the metropolitan area, into what I'm calling the lifestyle zone. So I think we're going to see more of that going forward, or in fact moving to significant regional towns in Australia with all the services and facilities that you would get in a major city, in fact.
And so it's a bit of downsizing. And what other in regional Australia? Is there any towns you've seen where it's really obvious, these trends?
Yeah, I've always got my favourites.
Okay.
Several of them. The fastest growing town on the Australian continent this year, and indeed for the last decade, is a town of about 50,000 people just beyond the edge of Melbourne in Victoria, of course, is Warragul-Druin, been growing at 4% per year for the last decade or so. The Gold Coast grows by 2%, and everyone gets excited about that. This place is going nuts. And the logic is that it services the whole of the Gippsland region, of course, but it's what I would call a tradie town. About 5% of the workforce are tradies, plumbers, electricians, carpenters. And on a weekday morning, they jump into their Ford Ranger ute and drive into the edge of town to build houses. And of course, they want acreage and allotments and affordability, of course. So you're seeing these lifestyle towns, tradie towns, places like Warragul, places like Morisset, Corranbog outside Sydney, places like Yanchep on the north side of Perth, for example. So sea change, tree change, tradie towns, all just blossoming beyond the edge of metropolitan areas.
Yeah, I know firsthand, daughter number 2 got married at the farm, and some of my best mates are trades, but just couldn't get them for a couple of years. So it's hard. Big good day to our Warragul Leongatha sale.
They know me in Warragul.
Do they?
No, I've been promoting it. No interest in Warragul other than
no property investments there, Bernard.
No, that's right.
Now, is there any other trends within tree change and sea change is quite early? What are some of the terminology you're discovering now? What's something we'll talk about in the next couple of years?
Well, I think this issue of farm aggregation is important, and the loss of population from the interior is a major issue, and the impact that has on country towns. If we want a vital, vibrant, growing, successful agribusiness sector on the Australian continent, which we do, we all want that, and we should want that as a nation. We should be quite vocal about it. We need vital, vibrant, successful country towns to deliver the services. But if you're running a successful, significant regional property, then you're going to need welding supplies and machinery being serviced, as well as banking and a local church and schools and all that sort of thing. So if we have a breakdown in family in villages and towns, then that has a reverberation effect on our ability to deliver agricultural product to Australia and the rest of the world.
Yeah, I know it was Warwick last Monday night, and line up for a steak at the local pub. The accommodation was all booked out. Dalby was busy on the Wednesday night. Gundawindi was super busy Thursday night. Last night in Canberra was busy. It was cold, busy. Griffith the other week was busy. So everywhere you go, it seems like there's lots of economic activity going. I might just jump back to you, Sal. What do you think about global volatility will do to superannuation funds? And we might stay away from the proposed legislation, but is there any volatility you think, we have about 1,500 clients and about 70 locations today watching. Is there any insights with global volatility for those who've got the nest egg and they're watching those markets?
Yeah, so we talked at the beginning about this sense that the world feels a bit different, and I think intuitively we all know that it does. But I do also think part of that story is going to be about more macroeconomic volatility, so more ups and downs in inflation. That we have more adverse weather events, like you talked about. Also, this prospect of supply chains not working as well might cause some disruptions to prices. So we've got macroeconomic volatility. And if we get that, what we also tend to get is financial market volatility. And so I think for our super funds, they're going to be fronting into an investment environment that probably feels quite different to the past couple of decades. So more volatile,
Yes.
probably going to need to be more nimble. But I think the one really interesting thing for our super funds is around the Australian dollar. And, we know that many of our super funds have assets offshore, particularly in the US. It's been a great place to invest for the last 15 years. So a lot of their capital has gone there. And typically they don't have much of a hedge on those investments. And the reason they do that is because historically, what often happens is when US equity markets fall, the Aussie dollar falls at the same time. And so that's a unique little cushion that you get as an Aussie dollar investor investing in markets offshore. No one else in the world really gets that. We have that. But it has felt, particularly recently, like that relationship might be changing a little bit and that correlation might be breaking down. And so we did have some days and some weeks where US equity markets fell and actually the Aussie dollar went up. That's not what we're used to seeing. And so I think a big challenge for the super funds going forward is to say, well, if we are in this new world where that relationship between Aussie dollar and equity markets isn't as strong as we're used to, then that might have to force them to think about changing their hedging strategy. And all else equal, my sense would be that if the market gets a bit of a whisper that that's what the super funds are talking about, they're going to want to buy Aussie on the back of that.
And Sally, we had a house call on the Aussie to the US. Is there any cross currencies you like to keep an eye on, or was there any other data you keep an eye on with respect to Australia's health? Because we're a massive exporter.
Yeah.
Mining, gas, ags. So as you said before, softs and hards. What other currencies?
So commodity prices we're looking at pretty carefully because, one of the things that we do worry a bit about is that indirect effect of everything that's happening in the US on our big trading partners up in Asia. And so we're sort of saying, look, we think Chinese growth will slow a bit this year, but if commodity prices hold up, which to be fair, they have been, that's going to dull the impact for us. It's going to make it okay for us. So we're keeping a close eye on commodity prices, but generally speaking, the things that we really focus on locally are going to be things like the unemployment rate, so looking at the labour market, and then probably the consumer. So like I said, I've been a bit disappointed by the consumer so far this year, but we are expecting them to pick up as those rate cuts start to come through in the back half of the year. And so I think, retail sales, consumption, labour market, and half an eye on inflation just in case.
Yeah.
And I think
that's dominated the media over the last couple of years, really.
It has dominated the media, and the Reserve Bank, to its credit, has done, I think, a fantastic job in getting inflation down and broadly keeping the economy on a reasonable path. Growth was slow last year, but the labour market did okay. And there wouldn't be many central bankers, I think, dead or alive, who could put their hand up and say, I did what they did down in Australia. So to get inflation down and keep the labour market ticking along nicely, I think is basically as good as it gets when you're a central banker.
Yeah, excellent. And Bernard, what's the biggest trend or change for Australians ahead? And let's just say the next 2, 4, 6 years. What do you think is a big change coming at us?
Well, the big change is, of course, the ageing of the population. You can't get away from that, and that has a generational impact on farming, of course, but it also shifts our spending behaviour. You look at the fastest growing job on the Australian continent at the moment. It is aged and disabled carer. In fact, by a country mile. In fact, so we're shifting from the cafe society of last decade through to the care economy of this decade. And of course, it's going to shift budgets in that direction. And that is only going to gather momentum going forward. And of course, delivering those services in all parts of Australia is going to be a great challenge.
So we're living longer.
Yes, we're living longer. I think we're also working working more. So instead of retiring at 65, we are working on those beef cattle farmers that I talked about. But I think there's actually a good thing. It's good for productivity to actually have people working if they can manage it, and if they're happy working, then certainly do that.
Is there any terminologies you're thinking that evidently the tree change and sea change has been around a long time now? Is there any other terminologies you're picking up in some of these trends we're looking at?
Well, look,
you talked about the hipsters before.
The hipsters before.
Define that one for us.
Well, the tradie towns, the hipsters,
Yeah.
I suppose. And
I'm not a hipster, am I?
no. In fact, there's a new generation beyond. No, you're certainly not a hipster. There's a new generation coming through. People are talking about Gen Z, although I find it very difficult because we're creeping in with the Americanism of Gen Z.
Yes.
In fact, I refuse to say Gen Z.
Yes.
So the next generation coming in, the millennials, are now moving into middle age. In fact, the oldest one is about 42. So they're officially middle-aged, I think, once you pass the 40 mark, of course. But the very interesting thing here is that by the time you get to 40, you start to think of different things. You are partnered up, you have 1 or 2 or 3 kids. All of a sudden, that inner city minimalist chic apartment in Bondi or St Kilda just doesn't do it for you anymore. You need to be in what people are now calling their forever home. And the forever home is not necessarily in the city. It can be in these lifestyle precincts beyond the edge of the metropolitan area. So forever homes is the driving force, I think, behind a change of behaviour by the millennials.
And I think, I've lived in, with the Bangarra, Tamworth, Armidale, Dubbo, Moree, Sydney. I've been just about every country town, but the investment in regional hospitals, unbelievable. Regional airports, unbelievable. Like, you just don't see a small Bunnings anywhere. Like, the services out there are wonderful. So I think the home forever in these towns, because it's got all the services. You don't have to come back to Macquarie Street, do you?
Well, I think the world changed 5 years ago with the coming of COVID.
Yes.
And the argument that the millennials had, certainly 5, 6 years ago, was that, look, love to go to the regions to an affordable house, but I work in the city. The thing that changed everything with Australia and beyond is the ability to work from home, in fact. And I think that releases people from the connection with the city. And so people will be picking up, I think, more affordable properties, not just beyond the edge of the metropolitan area, places like Warragul, but going further afield. In fact, perhaps not to the wheat belt, but certainly within striking distance of the capital city, maybe 2 hours or so, is the type of trend I would expect to see. We will be able to track this. If my theories are correct, the millennials will move, give up their inner city apartment and their inner city lifestyle for their forever home, then it will become evident at the 2026 census. In fact, we'll get the results in 2027. If I am correct in my prediction, you will never hear the end of it. If I'm wrong, we'll never speak of this prediction ever again. But I'm pretty sure, because if I look at what is a common denominator between Australians across the generations, across Australia, it is the relentless pursuit of lifestyle. And lifestyle for a couple with kids, a family, that really is the space you get. And the quality of life and the safety and the security and the sense of community that you get in regional Australia. You can get it in the suburbs, but I think people would be more inclined to pursue that in the regions, in fact.
Now, our bank managers would definitely relate to that at Roma today or Geraldton today, because our bank cards are got big logos on the side. And so you can't go anywhere in town without being known there's the bank manager. So, but you do feel connected, because you do get asked to volunteer at that or volunteer at here, or can we have some sponsorship for here? So you are part of the economy. Sally, any parting words or any parting views around the economics for our regional customers tonight?
Okay, so a couple of things. So the first thing is, my team and I, obviously have got to put forecasts down on paper. That's part of what we do.
Absolutely.
That process, as you can imagine, is a bit challenging at the moment, not just because things keep changing quite frequently, but also because when we think about it, there aren't many of us around who remember what it's like to live in an environment where tariffs are quite high. This is a big change for all of us. And so while we think we can, think logically about what might happen next, what I have been saying to my team is we've sort of got to be a bit humble in terms of our forecasting ability and explain to customers that, there are probably wider than is usual uncertainty bands around all our forecasts at the moment. But I think if there's one thing I would like to leave our customers with, it's probably the sense that, in what's going to be, I think, quite a challenging world, quite a different world, my sense is Australia is relatively well placed to navigate all of this. So like we said at the outset, we've got a lot of what people are going to want to sort of stockpile going forward. Hard and soft commodities. You know, we've got, yes, an aging population, but less old than other parts of the world, and that's a good thing. And we also have, you know, policymakers, so the Reserve Bank and also the federal government, who have plenty of scope to ease monetary and fiscal policy if things get really rocky.
Yep.
And so that's a really good place to be in, which is we know we can do a lot to put a floor under the economy and under our bank customers if things get really challenging. But hopefully they won't. But I do think we should be able to navigate through the challenges reasonably well.
Excellent. So relatively optimistic. And with
So
the government's got
cautiously
some,
optimistic, a
cautiously.
bit like our customers.
Exactly
Yeah.
right. And Bernard, any thanks again for coming in.
Pleasure.
Any final observations for regional Australia, country Australia?
Well, I think we should be very optimistic about regional Australia. I actually brought a chart in. It's the chart rather than the map. I think we'll get up at this stage. I want to talk about world population over 200 years.
Yes.
This chart shows number of people on the planet, 1900, 2 billion. By the end of this century, in fact, over 10 billion. It's currently 8 billion at the moment. Over the next 50 years, the world population will increase by 2 billion on a base of 8. It's a 25% increase in the number of people on the planet. That means, to my logic, that there is going to be a 25% increase in the demand for food, energy, resources, commodities, space security, lifestyle. What nation on the planet delivers food, energy, resources, commodities? That is us, in fact. So we should be gearing up now as a nation to lift agricultural product and export by no less than 25%. However, I am ambitious for our country. I don't think we should be satisfied with 25%. We should be aiming for 40%. That means that our capacity to channel these products through ports, the port facilities, port handling facilities, logistics, and the strength and diversity and services in country towns also needs to be improved, in fact. So this is why I would have confidence in the future of Australia. Agribusiness must be not just a business, it must be a pillar of our prosperity going forward.
Excellent. No, it is a wonderful graph, that one, and 25%. That's a lot of opportunity for Australia, isn't it? You know, and again, back to the softs and the commodities. I might just first of all just thank you to our panel, but also thank you to our customers who've come in to our various sites around tonight. I think the team at Claire in South Australia and Esperance in WA, Wayne's down there, everyone's entertaining, you know, some clients, accountants, solicitors in town. So thank you for your custom. I wouldn't be doing my job if I didn't talk about cybercrime and fraud. You know, I've only been banking for 33 years and we still take physical security very seriously. But unfortunately, the criminals aren't jumping across the counter these days. They're impersonating bankers. They're sending false invoices. They're tricking people to give passwords over the phone. They're phishing with emails and texts. So the local managers, the local regional managers at the sites tonight will explain some hints and tips. But my biggest hint and tip will be, you know, we'll never ring up and ask for your password. That's not what we do. Just be very careful out there. Have a discussion with your kids, your neighbours, you know, everyone who touches part of the business electronically, or not just the accounting. It's really important that we keep Australia safe and really take cyber crime and scams really seriously, because it's a big thing out there. Kind of, I'd nearly call it a mega trend, Bernard. It keeps me awake as much as credit risk does at the moment. On that note, team, thanks again for the wonderful panel. I'm not allowed to have a vote of thanks to the State of Origin tonight, but I will go the Blues. I've got the time tonight. Enjoy the football tonight. For those who are interested, Bernard, any tips on football tonight?
Well, I'm from Melbourne, so unless it's St Kilda, I'm not really interested.
Sal?
Got to be a Blues supporter.
Got to be a Blues supporter.
Yeah.
Okay, we'll finish the afternoon there, and thank you, team, and cheers.